Hi friends, in the previous video we found the trading account of the firm Mr. A as on March 2008. Today we are going to find out the profit and loss account. As we seen, there are a lot of adjustment in this question, that all adjustments we have to incorporate in the profit and loss account. Let us go to our markings in the trial balance. As per markings, rent rate and taxes are the first entry in the profit and loss account. Rent rate and taxes is 3000. Next, insurance premium 9000. However, in the adjustment it is given that as fifth item, insurance premium includes prepaid amount ₹1000. So we deduct the 1000 from insurance premium, we get 8000. Next, salaries is 42,000. Carriage outward is 21,000. Next, given that claims recoverable is 5,000, but as per the adjustments, in the second adjustment it is given that the claims recoverable has been settled with the insurance company for ₹2,000. That means the settled amount, deducting the settled amount, the other is a loss to the firm, or it is an expense. It return of 3,000 from the 5,000. Actually, the firm has to get 5,000, but it has lost 3,000. So that 3,000 should be shown as an expenditure for the firm. Therefore, after deducting the settled amount, we get 3,000 in the expenditure side. Next, given that advertisement expenses 9,000, and as per adjustment, it is given that 50% of the advertisement expense representing the cost of advertisement campaign during the year is to be written off this year. Therefore, we know that advertisement is an expenditure. It is actually it is 9,000 rupees is the expenditure. However, it is decided to return off 5,000 for this year. Therefore, the remaining 50%, not 5,000, 50% to be written off. That is, the remaining 50% only the expenditure for this year. So 50% of 9,000 means 4,500. The other 4,500 is a gain for firm for this year. Next, given that bad debts is 4,000. Electricity charges is 2,000. Next, as per adjustments, there is depreciation of 5% for the furniture and fixtures and office equipment, which is to be calculated in the straight line method. When we find the depreciation in straight line method, we need to know what is the original cost, what was the cost when it buy. So it is given that the original cost of furniture and fixtures was 30,000 and office equipment is 15,000. First we find the depreciation rate of the original cost. That rate should be deducted every year. That is the straight line method. So as per calculation, depreciation of furniture is 30,000 into 5% is equal to 30,000 into 5 by 100 is equal to 300 into 5 is equal to 1,500. Next, depreciation of office equipment is 15,000 into 5% equal to 15,000 into 5 by 100 is equal to 150 into 5 is equal to 750. So 1,500 and 7,500 are the depreciation of furniture and office equipment. Next, in the adjustment it is given that to provide 2% on sundry debtors for doubtful debts. So provision of doubtful debts is 2%. That means sundry debtors minus bad debts into 2% is equal to 1,50,000 minus 4,000 into 2% is equal to 1,46,000 into 2 by 100 is equal to 1,460 into 2, which is equal to 2,920. So these are the entries in the profit and loss account. Once again, we may check any entries missed from the adjustments. We included claims recoverable and advertisement, depreciation, insurance premium, prepaid, then next sundry debtors provision. There are one more adjustment, that is the deposit with the supplier was made on October 2000. It carried interest 12% per annum. So the firm A has a deposit with the suppliers, that is creditors, which started from October 1st 2000. Means there is only 6-month period. It started after 6 months of this financial year. Then the firm get interest for 6 months. That will be an income for the firm. So we need to find out the interest for the firm. That should be reflected in the profit and loss account. So interest on deposit, we find that 2%, 12% into what was the deposit? Deposit at the suppliers is 6,000. 12% into 6,000 into 6 by 12. That is 6 month interest. So 12,000 into 6,000 into 12 by 100 into 6 by 12. The 12 and 12 will be cancelled. Then 100 into zeros in 100 and 6,000 will be cancelled. We get 60 into 6. That means 360. So 360 is the interest for 6 months. That is a income for the firm. We express this income in the profit and loss account. So on the right side we write gross profit. We already know 3,37,000 as per our trading account. Then interest on deposit is 360. Adding on both sides, we get on credit side it is 3,37,360. Debit side 92,420. Debit side is less than credit side, so it is profit. Therefore, net profit of the firm is 3,37,360 minus 92,420 is equal to 2,44,940. So this is the end of profit and loss account table. We will see again in the next video with the balance sheet of this firm. See you. Bye.